Market Musings with Fairbairn and Russell. Hello and welcome to the Market Musings podcast, where today we replace Scottish Kenny with Scottish Leah. Leah is a young lady who works for Stockbox in the background, and today she is on the podcast instead of Kenny, representing the Scottish. So Leah, welcome, and of course we also have our guest on today, Ren from SI Capital. So yeah, first of all, Leah, how are you? Welcome to your first podcast with us.
Hi, Mark. I'm good, thank you. How are you?
Yes, doing well. It's great to have you on a podcast. We've worked together for a number of months, so it's good to get you on the podcast. And of course, we are on Zoom. We can see each other, which is actually the first time I've seen you. I
know, COVID times and all of that.
COVID times.
Zoom times.
Yeah, exactly. But hopefully there's light at the end of the tunnel there. And Ren, so Ren, you are the founder and the CEO of SI Capital, is that right?
That's right, yes. Yep, I set the company up 18 years ago. In fact, I think probably 19 years ago, actually.
Okay.
It's been a journey of establishing ourselves as a sort of an independent small cap and retail broker.
Yeah.
Over that, I think we finally got there. Took a bit of time, but
yeah, I didn't realize it was 18 years actually. I didn't know it was that long in the making. But I mean, the reason we are doing this podcast today with you and Leah is to do a podcast around getting set up with a broker or getting started with investing, and perhaps break down some of the barriers that people may have perceptions of getting started in the markets. And Leah is our young employee who is looking to get in. So that's why we have her on to sort of have this sort of newbie angle from it. But before we get into that, Ren, I wonder if it's worth just having a few minutes just to perhaps talk a bit about your background. You know, where did you come from, and what led you to start SI Capital?
I sort of started out, I guess originally just wandered down into London from Lincolnshire looking for work, and eventually saw an advert after a few years of working in different industries, recruitment and shipping. I was a shipping clerk for a long time. But I eventually saw an advert in the Evening Standard advertising for trainee stockbrokers, and wound up working for a company called Everett Financial, who were one of the early sort of small cap brokers, who were kind of ahead of their time in that they were supporting a lot of small cap, micro cap companies by way of giving them the funding they required to then either list or to see out their vision. That introduced me to the small cap market. It introduced me to I think back then it was before the .com era. It was during the kind of biotech boom that I joined.
Okay.
And then we witnessed, really learned very quickly what it was to give money to a small business with a big vision, and occasionally you'd see some of these businesses, small businesses, turn into very big businesses quite quickly, and see our investors make a lot of money. So it was quite an education.
And were you? How did you find being a broker? Were you a hard-nosed salesman?
No, it's always been relationships. Really interesting you asked that, Mark. I had someone talking to me about this the other day, because you really are 100% invested in the person you're helping to advising to invest into the market. There's not much you don't know about them. You know where they work. About a little bit about their personal life, and you're traveling a journey almost like a partner, really, a partner, and sometimes a psychologist, sometimes a therapist, because there's all sorts of things that can happen in the journey. Obviously, investment of someone's money is something you have to take so seriously, because you don't want, as a broker or as an advisor or as a human being, to offer someone the opportunity to invest in something and then see them lose money. So we are as invested as the client as brokers. You want your client to make money from the sort of stock that you're recommending to them. So hopefully, if you've got a really good team of analysts behind you that help select these stocks, then by the time the client hears about the investment from you, the hard work's already been done. The figuring out whether it's a good board of directors, whether the business is any good at all, whether they own the technology or the asset that they say they own. All of this stuff has to be done probably 2-3 months before you, as the broker, are articulating the share that you are advising your client to purchase. That work has to have been done long before you're on, recommending it to someone. We don't just pick the phone up and throw a dart in the stock market board and say, "Oh, I know. Let's recommend this to Mark today because we've just spotted it today." It's a lot more detail than that to get to that point, but it doesn't guarantee a success. You can do all the research you like in the world, but in the end, the once you've invested, the journey of the share has its own sort of path. But if you have done the work correctly in the first place, then hopefully that, by the time you're actually buying shares in the company, hopefully it will then see a decent performance. Hope that wasn't too much of a ramble, but that was just probably a bit expected.
No, I think it's a good answer, because there's definitely, I think, some perceptions with brokers, and maybe two perceptions. One is the fact that people perhaps don't feel they're perhaps wealthy enough to get set up with a broker. It's sort of out of their league. It's only for people with a large sort of cash position, for example. But also there's the perception, I think, that some brokers are maybe, BSers, they sort of pushing rubbish just to get the sale in. And we spoke to someone from who used to work with Jordan Belfort, from
yes,
I forget the name of the broker. Yeah, the Wolf of Wall Street guy. And of course that film came out, and obviously those guys weren't very honest, were they? But it's good to hear that you have that relationship with your client, that you want the company that you're pitching them to succeed as much as you want your client's investment to succeed. So what led you to starting SI, and do you still carry that sort of ethos through the company today?
What led me to starting SI? I guess the firm that I was working for in the city, not the firm that I mentioned originally, but another firm that I then moved on to. I think when I set up SI, I had a vision of really looking after my clients and being proud of my work. Sometimes when you are in that square mile in the city, it's very easy to just stop seeing your customers as human beings, as such, as people, and I think what I wanted to do, and this is why I originally set the head office, which is where I'm sitting now, up in Surrey, Godalming. It's where I live. It's, my house is here, my children are here, all my friends are here, and a lot. I would say a good, 80-90% of our original clients are all Surrey based. So I'm of the old school thought that I actually quite like to physically know my investors. I like them to be able to wander in to our offices, to meet me, to have a coffee, to chat. Obviously, it's not just me anymore. There are a lot more people now in my team. But I was quite happy with that transparency. I think in London, in some of the old city firms, there was always an ambition to have thousands of clients, and to see them as little as possible, So, if you had, if you had sort of to be accountable, you could quite easily be in London and not be accountable, if you know what I mean, because you rarely would your investors come all the way out to the city to meet you. Mm-hmm. Here, I was aware that, if I popped out for a sandwich at lunchtime and I'd been a scurrilous, ruthless broker to my investors, well, I was quite likely to bump into them on the high street. And so, there's an element of you want to do your job properly, and part of being in, I've been a broker for over 25 years now, and, part of that really, when you look at why am I still in this industry, fundamentally you do the job because there comes a joy in doing the job, a joy in doing it properly, and a pride in it, and it does not mean, and I wouldn't ever want any of your listeners to think this, but it does not mean that, some of the shares that we've selected over the years haven't gone wrong. People haven't lost money. They have, but I think, overall, we do a very good job. And when we get it right, we get it very right. But we get it right because we've done the research. Mm-hmm. We've done a heck of a lot of work before we make the recommendations. Mm-hmm. So being out here, coming out here, why did I do it? Well, I wanted to separate myself from all of the other firms that were out in the city. And, initially in the early days, that probably meant that I didn't earn anywhere near as much as some of my contemporaries in the city. Mm-hmm. But now we've got a very successful office in Mayfair. We're branching out into Dubai. We've got ambitions to out in Hong Kong and other parts of the world. We've got other products, but fundamentally, it's all about having a good team, having customers that you want to represent. Mm-hmm. I'll be honest with you. I don't think if we don't want customers that are going to be looking for whatever it is that the big city brokers might offer them. Which mm-hmm. might be over-promising. We can't over-promise. We have mm-hmm. to just be honest about what we invest in, and occasionally some of the investments we make are we literally hit it out of the park and the performance is outstanding, and the city talks about us, but those are the exception. They're not every investment we make. We hope if we make 40-50% on something that we've recommended and it's taken 2 years to get there, well, that's still a great performance. If we make 800% on something, then that's outstanding, but that's not going to be every recommendation. That's going to be one in every 20 or 30, but it might but it does happen occasionally, and we're in an interesting time right now. So
yeah, it is an interesting time, and do you think then, despite the growth, which is obviously very good, you still want to hold true to those values, regardless of how big the company may become?
Yeah, 100%. Mm-hmm. We don't need at this stage. It's not about trying to grow the company exponentially. Mm-hmm. It's about just growing it, sort of in a way that's sustainable. You know, I mean, I don't want anyone that comes to work for SI Capital, I want them to be here in 10 years' time. I don't want them to be thinking this is a stepping stone to move somewhere else next year. I want them to have attribute the same value that I had when I set up my first 2-3 customers. You know, those customers are still customers of mine today, friends now. And that's really what I expect from anybody that becomes a broker at SI or a member of the admin team at SI, the back office, the compliance team at SI. These, you know, we want good people. We want people that you know, top to bottom, are all thinking the same way as you know, as I did when we set up. Yeah.
And what was it like in the early days, Ren? I imagine a lot of long hours would have been spent.
The long hours don't stop, Mark.
Okay.
I'll tell you that now. The long hours are still there. What was it like? Well, you know, when I set the company up, I was under a whole load of restrictive clauses from my previous company. So I literally started the company up with 0 clients. And I spent the first 3 years, networking at numerous breakfast clubs and lunch clubs. And, you know, I used to phone, you know, I'd spend all day contacting all of the local accountants, solicitors, financial advisors, and inviting them to come to my office in Surrey to meet me and to meet some of my early team. And so we gained, you know, each client with some, you know, relevant amount of hard graft. It wasn't, we didn't buy a list of clients and suddenly acquire whole loads of people. It really was one by one. So yeah, it's very different now because, you know, we have a very good client base from that original foundation, and we have referrals coming in all the time, like you know, really at quite a steady pace now from existing clients and from the internet. I don't know how people have that quite got hold of us through the internet, but we do get a lot of Google inquiries.
Okay.
And yeah, we're you know, we're keen to look after people as much as we can, but there's only so many brokers here, so you know, we have to sort of try and make sure that we don't end up in that situation where you're not giving the same level of service because you've got too many customers. But we do offer, I think, the best service in the country. I don't think anyone beats us for the way we look after our customers.
Well, I can only speak from my experience. I am a client of SI, and I've had another bespoke, let's say, or boutique broker in London, and that was the one called Beaufort, which hit the headlines because of well, its demise in quite a bad way, really. And for what I can say from experience is that yeah, dealing with SI is a much friendlier, a much more honest, not pressured approach than it was from dealing with Beaufort, for example. The guy at Beaufort was very, you might say, typical salesman, you know, selling it up, you know, pushing you, you know, talking rubbish a lot of the time, you know, saying things like, this stock's moved 20% already this week and it's set to do more. Well, you know, it doesn't really work for me, that kind of approach. You know, it doesn't feel genuine. It just feels like it's another tick in the box, just to get some money out of me. And once it's done, it's kind of done, you know. And it might work or it might not. But with SI, it does feel far more personable, you know. Whether, you know, when I ring up, the guys genuinely know who I am, but they certainly sound like they do. When I say it's Mark Fairbairn here, they say, "Oh, hi, Mark, how are you?" You know. And whenever they ring me for anything else, it's you know. It's always a nice. I don't, you know, I like to answer the phone call, and then I usually will say thanks very much, and you know, let me think about it for a bit, because I don't like to make a decision, you know, sort of on the spot, and that's fine. Then, you know, it's a nice way of being.
Well, I don't think it's right to ever pressure someone to invest in any stock at all. In fact, it really goes against the grain of the kind of the regulator's principles anyway. But actually, it should go against your own principles. I mean, I really don't want to pressure you into if I'm a half decent broker, the last thing I want to do is pressure you into investing in a stock. You're then buying it almost against your will, but because you're being browbeaten into buying it because it moved 20% and it's going to move another 20%. No one knows what it's going to do next. It has to be that you personally, having heard the pitch, like the story, and that you actually want to invest in it. And if that's the case, then there's, we're all in it on the same terms. You've bought it, we've recommended it, you've bought it because you like the story. And, if the price goes down, well, you're not going to feel very bad about that. If the price then shoots up, you're going to feel, well, vindicated. This went well. But the journey is, as I described, being a therapist earlier on to our investors, because, once you've built a sort of a portfolio for an investor and you bought, call it, 5, 6, 7 different stocks, each stock is going to have a good day and a bad day. They don't all go up in one straight line, so, there's often, as the broker, you are kind of often updating clients. Most of our day is spent updating clients on existing positions. So you do have to kind of make sure that the customers feel updated, that even if a share price has gone down, that they're not suddenly panicking and they're not suddenly worried. Because that's the journey of any stock market, really, anywhere around the world. If you do come across a market that only goes up, let me know. I'll be invested in that one as well.
Yeah, exactly. So let's move it on to talk about getting started in investing, and indeed getting started with a broker like yourself. Of course, there is the sort of way to do it just independently, which would be through I think they're referred to as nominee accounts, which is the likes of sort of Hargreaves Lansdown, very popular one. Lots of people, lots of private investors hold stock through them. Of course, Interactive Investors, another one. AJ Bell. There are loads. A Share Centre. You can pretty very easily set one of those accounts up. You go through the disclaimers, you accept the risks and all those things, and then you're free to go. And then of course there's the bespoke broker route. But I might just bring Leah in here. Maybe Leah, do you want to set the scene a little bit of sort of what you were thinking? You sort of said you might want to be getting into investing, and set the scene. What are your sort of early thoughts on investing and getting started?
Yeah, I mean, so I think one of the kind of main things for me is that it can be quite intimidating, and there's a lot of information out there that you can do your research and stuff, but I think there's maybe a little bit of a stigma with investing sometimes, that it's only like really rich people, really affluent people that can invest with loads and loads and loads of money. So I think it can be intimidating, which I think, Ren, a lot of what you've just said is actually really reassuring. It's nice to hear, what you're saying about kind of caring about each individual and wanting them to invest in what they want to invest in and stuff. I think maybe one of my questions would be, what are the benefits of having a kind of, a boutique broker? For everyone, I suppose, but maybe mainly for someone that's new to investing. Is there a benefit to that if you're a total newbie like myself?
I think certainly, Leah. I think for someone that's just starting the journey, having a personal broker, it is going to give you a lot more of an education as such, in terms of you're starting a journey, having not invested before, into a different world of putting your money at risk. Now, when we put our money at risk, I think it's worth starting to understand certain principles behind investing, whether it's, understanding, right, the company that you're about to put money into. Why should we, what are the basic rules that or checklist? What's the basic checklist that we want to go through before we put our money into a share? And it'll be a blend of things. It might be, a reflection on the sector, so is this the right sector for me to be investing in right now? Let's look at the big picture in the world. High streets have been dying recently. Do we want to invest in a share that's a retail share that's got shops on the high street? Maybe not. Maybe actually right now, pharmaceutical shares that are developing new drugs to beat coronavirus. I'm just giving you the most basic example, but you might just look at the sector and say, what is the right sector for me to think about investing in? And it could be that. It could be battery technology for electric cars. Is that more worthwhile investing in, or should I be investing in coal mines? Because the future's all about emissions. Well, we know it isn't. So actually, already we've got a little sort of range of an idea, part of the checklist to look at. Then you might look a little bit deeper into the individual company. Look at its share price historically. Where's the share price today? If the share price historically has been very high and today the share price is very low, but actually this is a company that's in the right sector, then actually maybe now is the time to be investing in that company at this time. Conversely, of course, if the share price was very low 2 years ago and right now it's at the highest price it's ever been, and your broker is advising you buy it, or you're thinking of buying it, well, maybe just by looking at that chart, you might say to yourself, you know what, I think I've probably missed the boat on this. How much higher is this thing going to go? Because it was 2p 2 years ago, and now it's 50p, and it's actually at its height. So, that is again, another part of your checklist, another little measuring stick. Then you might look again at the actual more deeply as point 3 on your checklist. You might say, well, let me look at the board of directors. Who are these people that run this company? And actually, what companies have they been associated with in the past that I can have a look at? And if I have a look at those companies, and those companies that they worked at in the past or they were directors of in the past have been successful, well, maybe this is a guy I want to back. Again, on the flip side of that, if they've got a track record of having been involved with half a dozen companies that have all gone bust, well, maybe this isn't the company for you to invest your money into. So there are many other parts of that checklist that I won't go through now, but my brokers will always go through this with a new investor. And guess what? Initially, this will all be new to you, but in a year's time, you'll sound like an expert because you will now start quoting to us, okay, can you tell me a little bit about this, the director's background? I want to know about the historic sort of share performance and why is this sector of any interest to us going forward? So these are the things that I think you won't get if you are simply signing up online to a share trading platform for the first time and trying to figure it all out yourself. Your broker will articulate this stuff to you from day one. A good broker will go through that on day one, and hopefully you start to pick up on the reasons why we invest in certain companies.
Yeah, no, that's brilliant. That's all really helpful. It's really helpful for me, and I think our listeners will definitely enjoy kind of hearing about that. Off the back of that then, and I mentioned this earlier, do you need to have a huge big cash position to open an account, or can anyone do it, or is it kind of somewhere in the middle? What would your advice be for that?
Yeah, I mean, look, anyone can do it. In reality, that you you wouldn't want to be investing, to start a portfolio off. I mean, I would be looking at probably the ISA amount. If you were going to start a portfolio off, you might say, well, let me open an ISA. Now, the sort of, maximum you can invest into an ISA on an annual basis is £20,000 at this point. Now, with £20,000, you could probably invest in about 4, maybe 5 different companies. You can just split that up. It might be 2 to 4 grand per company. So you could build yourself a little bit of diversity in a share portfolio by investing, in 4, 5, 6 companies with £20,000. The advantage of investing in an ISA, of course, is that any profits you make will be capital gains tax free, so they're free of any tax. You do pay tax on any dividends, but that's normally fairly minimal and fairly irrelevant, because hopefully you're going to turn your £20,000 into a significantly larger amount of money over the years. So 20,000 would be your starting point, Leah, to answer your question.
Yeah. Okay. Brilliant. Thank you. And you mentioned before about a good and a bad broker. Can you go into a bit more detail on that? What would someone like me want to look out for? Or even a seasoned investor. What would you say are the key points that you want to kind of look out for when you're?
I would say, certainly in terms of, a bad broker's going to impose his ideas on you, and he's going to probably want you to invest a larger amount of money than you feel comfortable investing. So we go on that sort of, that's your starting point. Hopefully, a good broker is someone you can connect with, that you trust, that you don't feel you're being harassed by, that you don't feel belittled by. I think it's the same rule is true in life, isn't it? The people we associate with are the people that we don't feel, bullied by. And so, I would always reflect back to your instincts are normally right. Someone's, a good broker's like a good friend, hopefully. That they are a professional. Hopefully they're going to monitor your needs, understand your needs, understand your objectives, understand your financial circumstances. As a starting point, they need to know that stuff. Yeah, because of course, there's no, a good broker should understand that if you haven't got a lot of money to risk, or if you can't afford to take a lot of risk, then they should reflect that in what they advise you to buy. So a bad broker won't be bothered about any of that. They'll just tell you to invest in everything and invest big. That's not what we do.
And do SI have control of the investments? Is it will you buy and sell for the client?
Yeah. Well, what we ours is everything is done with dialogue and agreement. We don't push a button and sell until we've had a conversation with you about why we think it's worth selling. And after we've had that conversation, it's really over to you to say, okay, I agree with your thoughts and I'm happy to sell or buy. We're not, we work as an advisor to you. We are, we're essentially your manager, your employee. You're the one that's giving us the green light to do the things with your money that you want us to do, because you trust our judgment. In the same way that if you went to your GP and he said, I think you should, drink more herbal tea and do a little bit more exercise. Well, that's his guidance, and it's up to you to then do it. And that's us. Same thing. we'll give you the guidance on what we think you should buy and when we think you should sell things, but it's your call to give us the green light to press the button on your behalf.
Yeah. Okay. And with the sort of the 20,000 you mentioned earlier as a good kind of pot, is that something that you would need then to just in order to open an account with SI, or is that?
Yeah, I mean, yeah, I suppose an average account with SI is probably a bit higher than that, probably north of 50,000. But as I think in regard to helping a new investor get started on the journey, 20,000 is enough to get you started on that journey. We can open an ISA tomorrow. You've got 12 months to put £20,000 into it to get your full yearly allocation. Therefore, if we open an account for you tomorrow, you could, throughout the year, as we make the recommendations, you could put the 20,000 in over the course of the year, if that makes any sense. So, we might say, well, once your ISA's open, we might phone you up and say, actually, there's investment number one has come up, Mark, and we think you should invest no less than £4,000 in a small pharmaceutical company called ABC. And you would then say, okay, I'm going to take £4,000 out of my bank account and I'm going to put it into my ISA account so that you can buy that share for me. And then we might have that same conversation with you, 5 more times. You've then got your full 20,000 into your ISA fully invested, but you might have done it in 5 tranches of £4,000 a time. So you wouldn't have to start with your full 20,000 straight away, but you can, so you've got options, but you've got 12 months to get your ISA fully funded.
Okay. And what actually happens then, Bren, when how does it work? I mean, with the nominee account, you obviously do your own research, and you don't in some cases, but you pick a share and you buy it. But how does it work with you? I mean, presumably it starts with a phone call to the client.
Yeah. So setting up the account is very, very easy nowadays. It used to be a lot more time consuming, but apart from we go through a questionnaire with you. That's done over the phone. One of my team would give you a call, just so that we can establish what your circumstances are, what your attitude to risk is, what your financial experience has been in the past in terms of investment. So we go through that. We then need a copy of your passport or a form of ID, a copy of a bank statement, and a copy of a utility bill. And these can all be, attained quite quickly, and we can have your account set up within 24 hours. You then get an account number, a login number, and you get allocated a broker, and hopefully that relationship is immediately one that you're comfortable with. If it weren't, then we could allocate you to somebody else, but rarely that is a rare event. Once you start investing, you can then, through your mobile phone or through your computer browser, log into your share portfolio and see your portfolio build and see what the value is today, what the value is now, and how much cash you've got available on it, and so forth. So we're it's no different to online banking. Once you're set up, you'd have a manager that you talk to regularly, and you'd have access to see your statements.
So, of course, if you're doing it yourself in like a nominee account, for example, you're effectively buying stock, second-hand stock that's already out there to build your portfolio. With a broker like SI, then are you offering the same thing, to buy existing stock? Because I've heard of things, placings as well. Is there a mix between sort of new stock that the company wants to issue to raise funds and existing stock? How does it sort of work?
Yeah, so there's the secondary market. I mean, yes, we can buy any share on the stock market for you. So no different to if you went online and set up an online account. You wanted to buy Marks and Spencers or BP or AstraZeneca. You can buy those shares with an SI account, but equally, because we are broker to over 25 companies listed on the AIM market, occasionally some of those companies will be issuing new stock by way of a placing, and you will have you can, if suitable, you can have access to that if it's appropriate to your circumstances. That's higher risk than main market stock, but obviously it tends to be what most people that approach us are interested in, because of the potential returns.
So you're doing both then. You're offering placing stock, but also, second-hand stock based on an investment you think is a good buy. Yeah. Okay. And how does it work with the placing then? What do you have to make a pitch to the client?
Yeah. So we if a small pharmaceutical company, I keep using that example, but just to keep on topic, if they were to approach us and say, look, we need £4 million to advance the drug trials that for our new COVID drug. We would then, having done our due diligence with the company and with the drug trials they're talking about, once we've established that we think it's absolutely solid and everything we see about it we like, we would then approach our network of clients, and we would basically present to them what we know about the company and the drug trials. But we would also be offering to them essentially new stock, which might be at a discount to the price that the stock is trading at on the market at the time. So if, let's say, this company's shares are currently trading at 20p, their offering to incentivize people to give them the £4 million might be to offer new shares at 18p. So we will go to our investors and say, look, this company, they want 4 million. We've done our research. We like what we've seen. We think that we should give them the 4 million. We're recommending you buy X £1,000 worth of their shares, of their new shares, for 18 pence per share. And by the way, there's something called a warrant that they're offering. They're offering you a warrant. A warrant is simply an instrument that allows the company to issue more shares in the future, but at a price that is determined and agreed today. So sticking with the price examples I've given you, the shares are trading at 20p. We're issuing new shares at 18p because they need their 4 million quid, but they're also adding an additional incentive, and they're saying you can have a warrant which gives you the right to buy more shares any time for the next 2 years or 3 years, but you will agree a price today that you can pay 28p for them at whatever price so wherever the price goes to in the future, you've got a guarantee to be able to buy them again at 28p. So if the drug trials are successful, they get their 4 million, they do their drug trials, they're successful, share price goes to 50p. You've not only made your profit on the original shares that you bought at 18p, but you've also still got this document that says that for every share you bought, you're allowed to buy another share at 28p in the future. So once the share price has gone past 28p, you might decide to exercise your right to buy some more shares at 28p because the price is now 50p. And therefore, that's one of the benefits of being able to access a placing via a company like SI Capital.
Yeah, so you get perhaps the cheaper price than if you went straight to the market and bought them, and the bonus of warrants as well, which is great.
Yeah.
And
I think the interesting thing there, Mark, is that even the moment you have access to be able to buy shares at a discount and be offered the shares directly by the broker, quite often the only reason the company is raising money is because something exciting is about to happen. And you're in before the rest of the investing public are in, because you've got this unique direct relationship with a broker that has the ability to say to you, well, actually, I can get you in on something very new, and it's a unique opportunity to you as an investor, not to the whole country. So only clients of SI or clients of the broker of the company are the ones that are going to get to hear that they're about to do a drug trial, and that they've potentially got a cure for COVID. So it's quite interesting and exciting kind of way to invest. But it does come with a huge caveat that these things are normally very sort of risky, in that, the companies are small companies, and the money they're raising doesn't guarantee that they're going to get the cure for COVID at all. It just allows them to travel that journey, and hopefully they get the right result. It's for that reason that I would everything comes with a risk warning.
Yes.
We have to make sure that you as an investor aren't putting your life savings on the line into this one investment. Going back to your days of working with or being a client of another broking company, that is why we really don't want to advise you, push you, or bully you into anything, because things, every investment can still go wrong, and it can't be that you've been bullied into it. So there you go.
No, I think it's an important point, though, because a lot of the time you see on the sort of the chat boards or the chat groups that people buy into the story of a company, particularly in sort of mining and exploration, which is where I tend to find my interest. And people they buy into the story, and then the company will do a placing, and then they'll feel a bit annoyed that they perhaps weren't offered the chance to participate, because they feel that they do want to support the company. They are happy to part with more money to further advance exploration of what that company is doing. But the only way really to have exposure to that is with a broker like yourself. So I think it's really important that for people to understand that to have access to that kind of opportunity really only comes from having a broker, and I hope, and I'll ask Leah for her opinion in a minute, that we've perhaps helped to break down some of the barriers that the people might have had associated with setting up a broker. But I mean, from your point of view, then, Leo, how do you feel? I mean, do you think Ren is a trustworthy chap? Do you would you be happy to sign up and believe him and part with your money, or do you feel it's still a little bit alien?
Yeah, no, absolutely, Ren. You've sold yourself well. I would definitely trust you. No, I think that's been brilliant. I feel like a lot of my questions, or even anxieties, I suppose, about taking the plunge have been answered, which is really good. I think, like I said earlier, it can be really intimidating, especially if you've not come from a background where maybe like family members have invested or anything. No one in my family invests, so it's quite a new world to kind of come into, and there's all the different terms and rules and stuff. So it's a lot to get your head around. But I think for me, this has been really useful, and I would imagine that anyone in my position or a similar position would definitely find your advice and your input very useful, Ren. So yeah, definitely.
Well, there's no it's that complicated, but it does require that you have someone that can just explain some of the terms and so forth. That, in truth, it's like everything in life. You kind of get used to a new vocabulary, don't you? And I've only got to spend 10 minutes with my children to realize there's a whole different vocabulary of acronyms and so forth that are used in the younger generation that I'm still trying to get my head around. But look, I didn't. I think when 30 years ago, whatever, when I heard about the stock market and so forth, it was complete mystery to me. I'm a kid from a council estate in Lincolnshire, so I didn't go to university, and I've sort of, I suppose it was never predestined that this was the career that I was going to have. But having spent as long as I have spent in it, I think that it's right to demystify it for people, because everyone should have access to a broker. Really, everyone should have access to investment opportunities and have the opportunity to make money in the public markets, in the public stock market. Why not?
Exactly.
There's no. I mean, now there's. I'm always still surprised by certain things. I'm always still learning. But in the main, most of the decisions around how we invest and what we invest in, they can be taught quite easily. And I would say, if anyone had the time and effort to spend, a year just listening to me or any of my brokers, then I think they'd very quickly start to understand it and wouldn't find it so intimidating in the end. So very happy to look after anybody that is interested in stepping into this world.
No, I think that's great, Ren, and it's very you touched on an important point there, where sort of everyone should have access to a broker, and I completely agree. There is this stigma around it. A lot of people think it's only for the wealthy, and that they'll never get involved. It's something they can't understand. It's completely out of their league. But it isn't, because it's just ordinary people, like me, like Leah, like you when you got started, who really just want to, well, make some money, really, to improve their life, to improve their net worth, to enable them to do things that they always wanted to do, perhaps. And I remember it stuck with me for many, many years when I was at school. My D&T teacher, and I was sawing away, and he was talking to one of the technicians, and I didn't catch all of the conversation, but at the very end he said, money makes money. You just got to have the guts to use it. And I listened to that and I thought, that's a really it's a really important thing to say, and I never really actioned it until many years later. But it's very true. You put your money to work. You invest your money, and it creates more wealth. For anyone can do it, I think, is the point I want to make. It's not something to be scared of. You can get started and effectively start, bettering your life. And I wonder, Leah, what is it, just a final point, what is it why are you interested? What is it that interests you and entices you to getting involved, considering that there's no family history of it? I wonder, is it just working with us, or is there something that sort of piques your interest in it more?
I've always been very good at saving. I've always saved my money quite obsessively. Like, I really try and, anytime I get a wage or whatever, I try and put like a big chunk of it away, since I've been working since I was like 14. So I've always just saved as much as I possibly can. So I think from that point of view, I have always had a bit of an interest in investing. And then obviously, working with you guys has piqued that. But I think, just a bit of intimidation about it and unsure about it and trying to learn has kind of held me back. But I think it's something I'll do. But I would say, because I like to save, and I think instead of just having that money sitting there, like you said, put it to work and try and maximize that as much as possible.
Yeah. Yeah. And it's not doing much in the bank at the moment.
Yeah, no, definitely not.
Listen, that's been great. There were some other points I wanted to bring in, but we're coming up on nearly an hour here, so I think we should probably call it. And maybe Ren, we can arrange something in the future and catch up again. But I think from me, thank you very much, Ren, for your time. It's nice to have met you virtually for the first time, and a great chat. And unless Leah, you've got any final questions, I think we can say goodbye.
Yeah, no, I think I'm all good as well.
Excellent. Okay, well, thank you very much, Ren.
Thank you both.
No problem. And speak again soon. Thanks, then. Bye-bye.
Bye-bye.
Bye.
Thank you for listening to another podcast from Market Musings with Fairbairn and Russell.